It is 1 o'clock Central, so I think we'll go and get started. Welcome everybody to our August 2023 WPS Medicare Audit Provider Webinar. So before we get into the details and some of the materials, I just have a few housekeeping items to talk about. First of all, this is the first time that we've offered two separate sessions for the webinar. The idea is to give, we've heard from a few people that maybe a particular time didn't work. Maybe they'd prefer afternoon or morning. So we wanted to add some flexibility for attendees and also to accommodate more attendees in general. We want to make sure we don't run up against our max group size. Now, I will mention, though, each session has the same material, so it's not like a part one and a part two. It's just two different alternatives. Now, as always, each session will there are a significant amount of different questions. I'm certainly going to try to address those questions. Anything we talk about in part one, I'll bring over to part two as well. Any other questions that come up. But if for some reason there's a significant difference, then I would post both links, but I'm going to try to just keep it to one. But the recording link, which will be going to YouTube, as well as the PowerPoints, the attendance certificate, and the agenda, will be sent out within a few days of the meeting. It takes just a little bit of time to process the recording. I try to edit it a little bit, clip out the front end, the back end, and any delays in between. So that'll be sent out within a few days. And I do want to mention here, we have two different sessions. I'm going to be posting the survey link to the chat area as we get closer to the end of the session. And we certainly appreciate if you could take a minute or two to fill that out. We use that feedback to try to improve our session. Anybody from the MAC cannot take these surveys. So these are just for providers, consultants, home offices, and such. So I'll remind everybody about this, but I certainly thank you for taking the time for that. Now let's go through just the agenda really quickly. What you'll notice is that there are some topics that are kind of perennial. They come up pretty much every quarter. We carry them forward with some new information, new twists, but we also try to add in some brand new topics. So we have a couple other topics here at the top talking about the credit balance report submission, just more of a reminder than anything. And some of you may not even be familiar with that. It's not so much an audit function as kind of the reimbursement or finance side, financial reporting. So we'll talk about that in a second. This is the time of year where wage index becomes important. So we just have a reminder about the timeline and just a brief overview. Chance to submit your low volume request, assuming you qualify. Please make sure to do so by Friday. I'm following up with any of the contacts that I'm aware of from the last year that we haven't received yet. So we've received most of them. So there's just a couple dozen left. We'll talk a little bit about the S10 uncompensated care audits. That's one of those topics that pretty much comes up in every quarterly webinar, including the main S10 webinar we have, just giving everybody a status update. We don't get into too many details for this webinar in it. A new topic I wanted to bring up that I created a YouTube video and we posted a website or a web page on this, but I wanted to talk about some details behind the cost center, statistical basis, and direct assignment requests. Just some clarifications, just pointing out some policies, things like that. A big topic for many providers right now, and certainly with us in audit, or reopenings in audit specifically, would be the update on the current DISH issues that are out there. SSI realignments, just SSI in general, things like that. Another topic for reopenings is the nursing and allied health reopening projects that we have going on. So a little bit of discussion about that. Those are two carryovers from last quarter, but we do have a little bit of new information. We will spend a little bit of time talking about the final rule, the federal fiscal year 2024 IPPS final rule that was just published yesterday. We have a few slides talking about that. And then I also included a follow-up on the cost report documentation and the templates related to the DISH, Medicare, bad debt, and S10. Just time permitting, we'll see if there are any follow-up questions. If we have time, we'll go through a couple of the templates there. We did cover this last quarter, but it's certainly a topic that's becoming more important for auditors or for providers and auditors as you're now hitting those years that need to be using the new document. And then, as always, we wrap up with just an overview of the current website, any new articles we have out there, new webinars that are planned for the near future, and then YouTube training resources. And as always, with questions, feel free to type them into the chat area along the way. You don't have to wait until the very end to ask a question. We'll certainly have time for them at the end as well, but feel free to chat the question in the topic that it's relevant to. So feel free to bring it up anytime, and I have my chat area on the other monitor so I can see it then. So with that, we'll go ahead and get started. And the first topic I have here is a new one we haven't talked about on the webinar before. Again, it's not specifically related to audit. It's more of a reporting or reimbursement financial reporting type requirement, but it's a quarterly for all Part A providers. Now, the whole idea of a credit balance is basically this is a way of notifying CMS, the Medicare program, that you have an overpayment that is going to be taken care of. So we have 4 different scenarios here that could create an overpayment. But even if you have no overpayment, a credit balance report still needs to be submitted to show that. Basically, this is a requirement. And you can see here some of the reasons. If the facility is paid twice for the same service by Medicare, but then some other insurer as well. If the facility is paid for services that were planned but not performed, or if they're non-covered. If they're overpaid, now this is probably the most common scenario. If there's an overpayment because of errors made in calculating maybe the deductible or coinsurance amounts, or if they bill for outpatient services that are included in inpatient claim. So there may be other situations, other scenarios out there, but these are 4 fairly common ones. But again, no matter what, for Part A providers, specifically we're talking the hospitals, or mainly we're talking the hospitals for this webinar, this quarterly credit balance report needs to be submitted to avoid payment suspension. So the due date for again, it's 30 days after the calendar quarter. So we have September 30th, the end of this coming quarter, that'll be due by October 30th. December 31st will be due by January 30th. Now, this one, again, it's not coming out of the audit area. It's coming out of the financial reporting and the reimbursement area. So this is not sent through the same portal that we use for a lot of our audit items. Instead, it's sent through, if you recall the old portal we used to use a couple of years ago out of audit, it's just called the WPS GHA portal. And this one allows you to easily confirm that, yes, you've submitted it. You can prove that you've submitted it. That is the recommended method of submission, but it can also be faxed or mailed. Here's the fax number as well as our address. And is anybody else, I see there's some information about the connection cutting out periodically. I'm not getting a message on my side. Is anybody else seeing or hearing that? Static or cutting out, anything like that? Okay, thank you. Yeah, usually I get a message when that pops up if I get a bad connection. So hopefully it's not my side. Thanks for verifying that. So let's see. Oh, it's on the call-in option only. Yeah, I'm on my headset, so I avoid the telephone potential issues there. Let's see. Again, this is Part A providers only. Now, one of these credit balance reports is required for each of the provider numbers, each of the PTANs. Also, make sure to submit the proper quarter date that you're actually submitting for. And then with this particular form, all fields on that form, it's a CMS official form, so all fields need to be completed. So we're trying to bring this up to avoid these rejections, to avoid the potential withholding. So these are just reminders that any of these above errors would result in the rejection of the credit balance report. And again, the unfortunate consequence of that is that it could be a withholding, temporary. So as far as that portal, now again, if you've used this a couple of years ago before we started the Secure EDI portal, you may recall this, but if you go to our website at WPSGHA.com, you can go to the login or register button and select the create account button under registration. And you'll need some information about the facility, but that is it. Now, the one thing I do want to mention here, this was one of the problems we had when we were trying to use it for audit. This is limited to the providers. The information you need is from the provider itself. So, for example, a consulting firm or even a home office wouldn't be able to use that. And of course, if you do have any questions, please contact this email address here, financial reporting inquiry at WPSIC.com. Notice the dots in between those words. So that's just a little bit of information about that quarterly credit balance report. On to the next topic, which is just about to start. It's obviously started for some of the providers. You've been gathering this information, but now the audit staff is about to start in the process for this. So on 9/1, just Friday, any revision you have for the worksheet S-3 wage index data or the occupational mix data is required to be submitted. That's the due date for that submission. And then once we receive that, and by the way, first of all, here are a few email addresses you can use. These are the various supervisors we have in the audit area, those related to wage index process. So you can certainly send it on to them. And once we receive this data, we start to assign it out to the auditors. And we have about 10 weeks to complete the review. So this is one of the, I guess you could say that it is the tightest time frame we have for an annual project like this. We have 10 weeks to complete the reviews, make any sort of adjustments or determinations, and transmit that revised data onto CMS. And specifically, that puts us around 11/15, November 15th. So we're supposed to submit that onto CMS at that point. And now the other thing about this is a somewhat unusual process because that is the due date for the review. But in a way, it's kind of an initial review because once we send it on to CMS, they're going to put that data through various edits, various calculations. And in many cases, they will respond asking us to gather more documentation to support that. Or maybe they'll believe something has exceeded a threshold. So they'll ask for more documentation on that. So you certainly may very well receive some follow-up questions after November 15th, and that's driven by CMS. After they get that data, after they get the explanations, they have until January 31st of the next year to release the public use files, and then providers and everybody else can actually see that data. And then there is a due date of February 16th for hospitals to submit any sort of request, which must include that supporting documentation for any sort of errors that were noted. Now, it can't be brand new data. It must be like correction of an error. So maybe you submitted documentation for something or an improper adjustment was reported, anything like that. And then if we receive that request and the supporting documentation, we then can make adjustments within the next month approximately to submit the finalized data back to CMS. So those are the time frames there. And as far as, so again, that puts us at about March 20th. Then by April 3rd, there's a second appeal process. So if you are appealing a MAC determination, maybe you're appealing adjustment that wasn't wasn't reversed through additional documentation or anything like that, you have until April 3rd to formally appeal that. But the appeals process is different than your normal cost report appeals or even a claims appeal. There's a specific website. It's the Medicare Electronic Application Request Information System. And here is the website for that. And again, with any sort of appeal, just like a cost report appeal, you would need to see supporting documentation like a PDF or a Word file, an Excel spreadsheet, anything like that. So those are the time frames we have for the wage index. Now, there are a few additional things just as notes or suggestions, I guess you could say, for the wage index process. This label says for providers that use HFS, which actually at this point in time, that's the only hospital cost report form set available. So this would pretty much be everybody. But whenever possible, we encourage that if you have adjustments you'd like to make for the wage index process, please send the HFS.auditor file that shows what those adjustments were rather than just a PDF or anything like that. That just cuts down on the potential for any sort of mistake or misunderstanding, and it certainly improves and increases the efficiency. So if you can send that .auditor file, we already have the .mcrx file. That's the initial cost report. The .auditor shows what adjustments you were trying to propose, and we can carry that over. And if we need to make any additional adjustments based on the review, we can do it in that same file. Now, again, this middle bullet point really won't apply anymore because HFS is what everybody uses. Contract labor, that goes right along with the wage index review. And if you have that spreadsheet, you can submit that by that 9/1 deadline as well. So there have already been website articles, reminders about this. And I know this is just a couple of days before the due date. Just one last reminder, basically, if you haven't already done this. So that takes us through the wage index process, those first couple of items. The next one, I've got a little bit of information on the screen, but it's really the same thing as we've had for inpatient hospitals, acute care hospitals, I should say, that they're located more than 15 road miles from the nearest acute care hospital, and they have less than 3,800 total inpatient discharges during the year. And by the way, that particular item, that amount is found on worksheet S-3, line 1, column 15. Line 1 specifically, it's just those inpatient hospital discharges. That's the important thing to note there. So it's the same process if you've qualified in prior years. It's the exact same process this year. The attestation, again, if you've already qualified, the attestation that you still are located more than 15 miles from the nearest subsection D hospital, that's all that is. That's all that annual application is. It's basically an attestation that nothing has changed. No new hospitals have opened up. You haven't moved. No new roads have been built that would change that road mileage. That's the attestation, as well as a copy of your most recent worksheet S-3 to show the discharge amount. Now, that's kind of an odd thing that CMS built into the requirement because we already have access to that. But since it is clearly stated in the CMS, the Federal Register, please make sure to include that as well. And again, this has been the criteria for the past few years. It used to be based on Medicare discharges only, and then CMS could actually post the factors in the Federal Register. But now that it's based on total discharges, which can only come from the cost report, it's a review that we have to do, and we have to calculate the factor ourselves. By the way, the factor calculation, mathematically, it looks a little odd. And really the way it's published in the Federal Register, it's a little bit more confusing because they have it on one line. They have both of these versions of the equation on one line. there was an equal sign in between them. So I separated them out just to make it easier to follow if you ever wanted to calculate it yourself. Obviously, if you're over 3,800, you're not going to have an add-on. But basically, as an estimate or as an example, if you have 1,250 discharges, that amounts to a 19.32% payment rate. So that's the calculation. The letter that we send out after we complete these reviews will include the factor as well. So you'll be able to see it that way. So that is due by Friday. We've just about received them all. We've got a couple dozen left. Now, here's the point I do want to make. If you don't submit it by Friday, the reason it's so important to submit it by Friday is so there's a seamless transition between one year and the next, one federal fiscal year and the next. You'll continue to get your payment. But if you don't submit it till after Friday, CMS requires that the status becomes effective 30 days after we complete our review. So there's a guaranteed 30-day gap there if you don't get it in by Friday. So this is the reference to the final rule if you want to find information about that. You can send these requests via email to either of these two email addresses, and then I work up the reviews, and I usually send the letters out in bulk around the middle of September. As soon as I'm done with all of them, I'll send them all out. And I also, in addition to the hard copy, I send a copy via email to whatever contact sent me the initial request. So that's what we have there for low volume. For S10, so again, this is something we've brought up for several quarters now, really since the beginning. I have a little bit of history here, kind of showing how these reviews started. We don't really need to dig too much into that, but I do want to talk about something coming from the final rule. This was proposed, it was expected. The 10/1/23 rates for federal fiscal year 2024 will be based on the 18, 19, and 20. And those are federal fiscal years. Those particular cost reports, it'll be a third of each of those rates. It'll be averaged together. So this is the first year that they've had all 3 years used as average, all 3 years of S10 data used as an average. Last year they only had 2 years they could use because not all the years had been fully audited, 100% of DISH eligible hospitals, but now we have 18, 19, and 20. So we have that. Those rates were published in the Federal Register, and I'll reference that in just a bit. We are currently working on the federal fiscal year 2021 audits. These are cost reporting periods beginning between 10/1/20 and 9/30/21. We assume CMS is going to continue on with their averaging like they have in the past. So this will probably be a third of the 25 rates. Now, just as clarification, the audits, the S10 audits, are for any DISH eligible hospital, and CMS has clarified in the past that this is any hospital that has reported DISH on worksheet E Part A, line 34. That currently includes SCH and MDH providers, so is completed. This is just an excerpt from the 21 final rule where they reference the fact that SCHs will be included. Now, as far as, this is another reference to the SCH, so we do need to audit the SCH hospitals. These are just a few links we have for various resources. We've talked about these quite a bit in the past, but these are on our website. I'll show you the website in a little bit. We have a few YouTube videos. And again, every year, right at the beginning of the S10 cycle, we've had a brand new webinar devoted solely to S10. So that's kind of a training there. So now I'm going to talk about a new topic here. it's not new as in it's just now coming up, but it's a topic that we haven't really discussed a whole lot lately. In statistical basis, other than the standard bases that CMS has on the worksheet B-1 of the hospital cost report, and any direct assignment requests. So we do have a link here that I've posted that goes through many of these different topics, different requests, but I wanted to just bring it up in our quarterly webinar to point out a few things about it. Listed here are various references for each of the different types of requests you might be submitting. And I put them in kind of the order where they're found in the policy manual, but some of them are more in depth than others. I'm actually going to talk about them a little bit out of order here. So the two that are most common would be 2313 and 2313.1, the change of a statistical basis. So for example, you might have been using square footage to allocate your capital cost centers. Maybe you want to change that to dollar value. There are a variety of different things you could change the different statistics to, but any change in statistical basis, the use of unique cost centers. So if you don't have enough detail, the way the cost report is designed, if you want to break, for example, A&G or administrative in general, if you want to break that out into more detailed kind of sub-cost centers, if you will, you can certainly do that if you have a justification for it, if you have the documentation to show that you can maintain that data and that it's more accurate. These two tend to go hand in hand, 2313 and 2313.1. These are due 90 days prior to the end of the cost reporting period. And I'm going to pull up the policy manual here in just a second to look at a few things. But I wanted to point that out, the 90 days prior to the end of the cost reporting period versus 90 days prior to the beginning of the cost reporting period for the direct assignment requests. The reason for this, the reason CMS is very stringent on direct assignment requests is that just by the nature of it, if you're directly assigning things and you're going to use that data for your cost report, if that's rejected, that might mean that you don't even have the data you need, the statistics and such, to fill out that cost report. So CMS doesn't want to wait until 90 days prior to the end of the cost reporting period, basically to tell a provider, no, that's not allowed. This needs to be fully approved 90 days prior to the beginning of the cost reporting period, or I shouldn't say fully approved, it needs to be submitted so that we can approve it prior to the cost reporting period. That way, if it's denied, you have time to make sure you're keeping track of all the necessary statistics. So we have that. Again, the direct assignment, I'm going to pull that up a little bit. That's the most contentious of all the requests there. We'll see why in just a bit here. 2313.2E, this is the use of time studies to allocate direct salary and wage costs. So by their nature, salary and related costs, they can be directly assigned. CMS says, hey, there's no problem with that. That makes quite a bit of sense. I mean, direct labor, just by its nature, is a direct cost. Whereas this direct assignment up here is all about indirect overhead type services that you're now trying to directly assign. It's much more stringent of a requirement. But the time studies themselves, and we're more talking the ones, by the way, there are different requirements for physicians versus non-physician staff. Here we're focusing on the non-physician staff at this point, but we'll go through these sections in just a bit. Before we do so, I do want to point out one more thing though. In addition to the PRM 15-1, the similar types of instructions for the stat changes in the unique cost centers can be found under the worksheet B and B-1 cost reporting instructions, which are found in Pub 15.2, section 4020. This also, again, it tells you about the change in statistic. It also brings up the simplified cost allocation methodology, which I definitely want to point out to avoid some confusion here. So with that, let me open those up here. And I'm going to find chapter 23. Okay, so let's go to 2313 first. Let's see, gotta go one more. Okay, 23, that's 2312. Here's 2313. So this drives the changing of a statistical base, which is the main portion of this section, or the order in which the cost centers are allocated, which is much less common. But here are the time frames again. You have to submit it 90 days prior to the end of the cost reporting period, and then we have 60 days to review it. So before that cost report period is ended, you should have about 30 days, kind of a period to make the change, if you will. So it if you are requesting a change in allocation base, maybe you've used a different base all along and now you're changing it, CMS requires that you maintain both sets of statistics until an approval is granted. And again, the reason for this is that you may not even be requesting it until midway through the cost reporting period. So if it's denied, you need to have a way to fill out your cost report with the original statistics. And if the request is denied, we would have to go back to that previously approved methodology. Now, there have been situations, I guess I do want to stress here, the reason we're bringing this up is that over the past, I don't know, 5, 6, 7 years, this has been something CMS has really stressed quite a bit. And when they do quality reviews of our desk reviews and audits, they look for these things, mostly in the critical access hospitals where there's a cost impact, but they do also review it to some extent in the acute cares and other types of facilities. So they really want to make sure the data they're getting, whether it was audited or not, and again, we don't necessarily audit cost all the time for an acute care hospital, even though it's used for future rate setting. So they at least want to make sure that the proper statistics were used, the proper cost centers, and that's why I'm bringing this up here. So we have all of that. Let's see. So that's the statistics. Again, it just must show there must be a reason, a justification for why this statistic does a better job of allocating that indirect cost out to the various other revenue producing cost centers. So that's a little bit about that. The unique cost centers. So this is where you have, you know what, I'm going to open up a cost report here just to illustrate. I'll bring up a blank one here. Just need to show you the shell. I'm not going to show another provider or anything like that. Okay, let me reshare. So again, this is just HFS. It's just a blank shell, no actual provider. But when we open up the worksheet A, you see all of the standard cost centers. CMS basically says these are the ones that are most commonly used. Now, obviously, not every provider is going to have every single one of these cost centers. You might not have an RHC, you might not have organ acquisition, but you might find out that there are some that you need to break into more detail than is what is given here. So maybe, for example, again, A&G is a pretty common one. You might decide you need to break A&G out into multiple cost centers, what's known as fragmenting. You might decide that you need to break your capital cost centers into multiple cost centers. Maybe you have a new building, new medical building, and an old one. You may want to separate them out to better allocate the costs. So those are the unique cost center requests. The statistical basis requests, when you open up HFS and you open up worksheet B-1, this is where you'll see the statistics, and these are the standard statistics. For this particular cost center, this is what CMS expects. If you're changing from that, that's where the change in statistical basis needs to be approved. Once it's approved formally with a letter, you can continue using that basis for the future. You don't need to get an annual approval, but you do need to have documentation that it was approved. And then, maybe you're going to use it for 5 years and then change to something else. That's certainly fine. You'd need to get approved at that point for the other change. So that's what we're talking about with the unique cost centers and the statistical basis. Again, it all boils down to more accurate cost finding. Any of your requests, any request you make must justify why this is more accurate from an accounting perspective. Again, we have the same 90 and 60-day requirement. If it's a general service cost center that you're trying to create, a unique cost center, you must have one statistical basis that relates to the use of that particular cost. It has a correlation to it. That's the key thing here. So that gives you a little bit of an overview on those two requests. By the way, the YouTube video that I have out there on our webpage definitely goes into more detail than that, a few more examples. The other thing I want each of these, but these need to be submitted again, and we review these and approve them. So I guess really no more to add there. Again, 90 days prior to the end of the cost reporting period. Now, once you're approved, so say for January, you're going to use the first week, for February, you're going to use the second week, so on and so forth, then you can use that same structure for years on out. Now, obviously, the dates will change just because the calendar changes every year, but you can use that same structure. So if you're approved for that 1 year, you can use that same thing, first week, second week, third week, in later years without getting reapproved. It's only if you want to shift which weeks you're using for a particular month that would need to be changed there. So we have that one, and then 2307. I went past it. That's where I wanted to spend a little bit more time here. The direct assignment of general service costs. So again, we know that salary and payroll type related costs are directly assigned just by their nature, but overhead or general service costs are indirect by their nature. And by default, CMS says we need to use some sort of statistical surrogate to do the best job we can of allocating that cost out to the revenue producing cost centers that use that service. Because ultimately on the cost report, we're trying to figure out for a particular cost center that charges this much revenue or charges this many charges, what is the underlying cost of that service? So we want all the costs. By the time we get to worksheet C, we want them down to the revenue producing cost centers. And to do that, we have to allocate all of these overhead costs. CMS does realize that there are some situations where you don't need a statistical surrogate to allocate a particular type of overhead cost. You may have a better, more accurate way of doing it. It's relatively rare. I'm not going to say it doesn't happen, but it certainly happens. But you can't, not every cost center, not every overhead cost center could reasonably be directly assigned. That would be an extremely unusual type of request. Some examples they give here are things like utilities. Now, normally you think the entire facility uses electricity, and it would be hard to assign that utility cost out to each and every cost center. But there might be situations where certain buildings that are used for only a specific purpose or whatever, maybe they have separate meters. So you can track the utility usage for each of those cost centers. That would be a perfect example there. What they do stress, however, is that you have to show that actual usage documentation. If you're pulling up some sort of statistic or estimate, by its nature, that's no longer direct assignment, and you're back to using statistics for allocation. Here, they even go so far as to say that time studies are considered statistical surrogates and thus may not be used. The one exception, of course, being the salary and related costs. So here's where you see that the request must come in no later than 90 days prior to the beginning of the cost reporting period, because you need to know whether it was approved or denied before you start tracking cost for that data or for that year, that cost reporting period. And here's where they specify that this is separate from the salary and wage costs because those are allowed with a time study. So you've already developed a way to assign that cost to the various cost centers throughout the period, and that helps to prove that that's a more accurate method. So we have that. The other thing I do want to mention, by the way, is that any of these approvals that are being made ahead of time are pre-approvals, but they're subject to audit as far as, do you actually have the documentation that you said you maintain? Even if we approve something, if you can no longer show that you've recorded that throughout the accounting period, then of course we'd have to revert to a different method. Let's see, again, it must be a factual and auditable basis. It cannot be using an average, estimate, or statistical surrogate. So anything like that. Let's see, that's pretty much what I wanted to point out there. Those are some of the more common situations that come up with direct assignment. Again, that's 2307 was the policy for that. Oh, it's simplified. Yeah, let me bring that up. That was the other piece here. So if we go into the B-1 cost reporting instructions, if we take a look at that, by the way, B part 1 and B-1, they share the same cost reporting instructions, but a common misconception when you look at the very top of worksheet B part 1 and you see all these different statistics, a common misconception is that these are the standard statistics. The reason that's wrong is kind of twofold. First of all, this doesn't list out every single cost center. Second of all, it's under this simplified cost allocation methodology. That's this paragraph here about simplified is referencing these statistics. They're basically saying if you choose to elect the simplified cost allocation methodology to reduce the cost of maintaining a bunch of statistics, CMS gives you the ability to do so, but you must use exactly what they've listed here without any deviation whatsoever. This means you can no longer fragment a cost report. You can no longer fragment your capital cost centers into 3 or 4 cost centers and use different statistics there. You must use these same cost centers and these specific statistics. Now, this is an election that once made, you must stick with for 3 years, unless there's a change of ownership, as CMS says down here. And it's the same 90-day requirement for electing this. So this is the one situation where it's no longer about accuracy. It's more about simplification, cost reduction. even though CMS does have a little blurb here that says the election of this method cannot result in inappropriately shifting costs. So it's not so much about necessarily accuracy, but more about intentional shifting of costs. And they also give some alternative statistics for these 4 cost centers here. So simplified is yet another request that can be made there. So hopefully that helps to clear up some of the issues that might come up with these types of requests. Now we will move on to DISH. Now, what I want to mention here, I was really hoping we'd have even more change requests or anything like that. So some of this is just more of the things we covered last time. We're going to refresh. I'll give you the little bit of information that I do know that I can release, and then just mention that at some point in the near future, we should be receiving these change requests so we can start moving forward with some of these reviews. So the DISH issues at hand are really focused on the SSI ratio. There are a few different issues related to the SSI ratio and the Section 1115 waiver days, which impacts the Medicaid day and the Medicaid ratio. We're going to see a little bit about that in the 2024 IPPS final rule section in a little bit. That was actually addressed, but that's more prospective. So we'll talk briefly about what's happening now for 1115 waiver days and what will be happening effective 10/1/13. Then again, we'll talk about the SSI ratios. So for these, for the SSI ratios, as many of you on the call have known for a long time, there have been a lot of issues out there pending in various courts, pending with CMS about how to handle the SSI ratio. The general rule historically has been that the SSI ratio includes patients that are entitled to both Medicare Part A and the SSI, Supplemental Security Income. And that's divided by the number of patients or the patient days for patients entitled to Medicare Part A without SSI necessarily. So again, the key word there is entitled, not just eligible or not paid or anything like that. So there really were 2 questions that have come out of this over the years. What about Medicare Part C or Medicare Advantage days that are not technically paid by Medicare Part A, but they are still entitled? The patients are still entitled to Medicare Part A. Just a slight distinction. And also, what about exhausted benefit or non-covered days that really aren't paid by any part of Medicare because they're no longer covered? The point here that's been decided throughout the various courts is that the patient is still entitled to Medicare Part A, regardless of whether they actually get a service paid or covered under Part A. The idea is that they never lose their entitlement. There are very few situations where a patient would lose their entitlement to Part A. Medicaid ratio is the other side of this, of course. Here we have patients that are eligible for Medicaid, but they're not entitled to Medicare Part A because those would be dual eligible patients if they were eligible for both. So just Medicaid eligible days divided by total patient days. Notice that's a different denominator than what we used up on the SSI ratio. Now, again, these Medicare Part C and exhausted benefit days have been contentious over the years. We know that they would have to go in one or the other, assuming, of course, it was Medicaid eligible. Now we know that the Part C days and the exhausted benefit days, they go in the SSI ratio. Therefore, they cannot go in the Medicaid ratio because they are entitled to Medicare Part A. The other question we have with the Medicaid ratio, and really the only question we have remaining at this time, is what about Section 1115 waiver days? They're not technically your traditional or full Medicaid, but the various states have certain programs in place to allow coverage under Medicaid for various reasons. So we'll talk a bit about those and again how the treatment is changing. Now the big thing here is the time frames for when various coverages or entitlements are allowed. If you have discharges pre-10/1/2004, only covered days were included in the SSI Medicaid or the Medicare ratio. That's just how it was handled pre-10/1/04. Everything else was in the Medicaid ratio. And by the way, this is again historically. There was no real discussion of Medicare Part C at that time when those rules were first put into place. CMS 1498, the ruling 2, we had the first ruling which addressed a variety of DISH issues, and then the second ruling addressed this issue particularly, only impacted the exhausted benefit days. And furthermore, by the way, the exhausted benefit days, a phrase that's used is total versus covered. Covered as in paid. Total means that as long as they're entitled, they're included, regardless of whether they're paid. Covered obviously means they have to be paid and covered. That particular ruling explicitly left Medicare Part C out of the discussion. They only talked about the exhausted benefit days. But the point of this issue is that they're really to be handled the same way. It all boils down to, were they covered or not? Medicare Part C and exhausted benefit days are not going to be covered under Medicare Part A, but they're still entitled to Medicare Part A, so they're treated the same way. Later change requests, that actually these are still going on. These were put on hold for a while. We had the change request. Oh, and by the way, these are the MAC change request. I should give you the provider. The public change request was 10484 was the newest version. It mostly had the same language. I think 87 just had some time frames and such. But 10484 is the change request that you can find on the CMS website. And this talked about that whole election for total versus covered. For pre-10/104, providers had the option to elect which one they wanted to go with. And of course, you could also elect whether you wanted a realignment. So whether you wanted to stick with the federal fiscal year developed SSI ratio, or whether you wanted to have one realigned to your cost report period. All of this was put on hold, along with virtually all the other SSI and DISH issues prior to 10/1/13, as CMS was working out how they wanted to handle those based on all the court cases. This is what was contested in the Alina case that went all the way up to the Supreme Court actually a couple times. So let's move on to 10/104 through 9/30/13. This was another issue altogether. It was the same underlying issue, just how the rule was changed. So in the 2004 proposed rule, which was then changed quite a bit, it was reversed in the 2005 final rule. Basically, CMS initially proposed to keep these exhausted benefit days in the Medicaid ratio, but then their response was that, hey, clear public comment persuaded them otherwise. They decided to put them in the Medicare SSI ratio because they're still entitled. In that same rule, CMS proposed to include the Medicare Part C days in the Medicaid ratio, but then they finalized in 2005 that they were instead going to put them in the Medicare SSI ratio. This was appealed in the Alina case because it was not a logical outgrowth of the proposed rule. CMS just completely reversed what they proposed without going back through notice and public comment again. So there's a pretty lengthy history of how this went back and forth throughout the court cases, all the way up to the Supreme Court a couple of times. But one thing I do want to point out here is that anything prior to 10/1/13, any settlement that was still reopenable as of the time they gave us the instructions, CMS told us to issue notices of reopening to protect the reopening rights as the courts figured out how they wanted to handle it. That's the first issue we have going on here. And just from WPS specifically, we have right around 3,000 of these notices of reopenings. And when we talk about the Alina case, those are the ones we're talking about. They're not just a line of providers. They're any provider that had DISH 10.1.13 or prior to 10.1.13 that was still reopenable. Again, a long history. We won't go through the details of how this made it up to the Supreme Court case a few times. But finally, in 2019, the court agreed that CMS made a mistake in how they handled the ruling, how they handled the public comment. They remanded it back to CMS to do a proper notice and comment rulemaking, which they proposed in August 6th of 2020. And they basically said, hey, let's put the Part C days in the Medicare ratio, just like they properly ruled 10.1.13 and after. They already had a proper rule in place for that. They wanted to be consistent, but it was retroactive rulemaking. And that was a bit contentious, of course. Anytime you have retroactive rulemaking, that raises some questions. Now, the Empire Supreme Court case, which was on the exhausted benefit days issue in 2022, it basically strengthened the definition of the whole entitlement to Medicare Part A, but it didn't address Part C specifically. But as I said, it's essentially the same issue. It's entitlement, whether that trumps coverage. And the Supreme Court found that it did. So with that Supreme Court case, that basically strengthens CMS's argument and their retroactive rulemaking, or so they believe at least. That was just an issue with the Ninth Circuit. So now we move on to the final rule that was issued June 9th, and that's where CMS said that the Part C days are going to be in the Medicare SSI ratio, which they've actually been in the SSI ratio for quite some time, but the rule wasn't settled until now. So we have the final rule, and the only thing we're waiting on is the change request to effectuate that final rule. So that was for anything prior to 10.1.13. Now, as I said earlier, that discharges on or after 10.1.13, there was already a properly effectuated rule in the 2014 final rule that put both of those things in the Medicare SSI ratio. So, yeah, there might still be appeals about it, but it's not the same appeal. There's a properly effectuated rule for that. So again, what does this mean? It means we know pretty much what CMS is going to do or going to have to do. We just aren't 100% sure of the time frames, exactly how they're going to have us do that. But once they issue the change request, then there are a few things that'll start rolling, we believe. CR 10487 or 10484 for you would start rolling again. This relates to those pre-10104 SSI issues, including the SSI realignments. We have a variety of other SSI realignments that are on hold. Again, anything prior to 10.1.13, we're waiting for CMS to return those at this point. And as I mentioned, we have all those 3,000 ALINA reopening letters related to the ALINA issue. Now, based on the reading of the Supreme Court, based on the Supreme Court decision, based on the reading of the final rule, we believe CMS is going to be requiring us to formally effectuate a reopening, even though it'll essentially be a zero settlement, assuming the right SSI ratio was used to begin with. And I stress, we believe that, but until that final rule is issued, it's all up in the air. So it could be a notice of closure, just a flat notice of closure, but it's probably more likely to be an actual reopening, a zero settlement reopening. That way, it'll establish new appeal rights for providers in line with the requirements of the Supreme Court decision. So we have that. This one I'll talk more about actually later. It's just, well, I think I took it out of the later one. CMS has stressed that reopenings that are solely based on a change of legal interpretation, maybe due to a court case, for example, that does not apply as a basis for reopening other providers for that same issue, even if it's the same issue. So that's the key thing about this. We already reopened the Alina cases at CMS's direction, and those were reopenable. It was everything reopenable at that time, but this would not allow us to reopen brand new cost reports for that issue. So that takes care of the SSI ratio. Again, I was hoping we'd have more by now. Hopefully in the next few weeks or so, we will. The next issue with the Medicaid ratio is the Section 1115 waiver days. Now, there was a change request issued. It's 12669 back in March of 23, March of this year. I have the link to the CMS website here where you can find the details about that. But basically, this actually relates right here to this prohibited reopening statement. Any currently open cost report, or if you have a valid appeal for a cost report for these Section 1115 waivers, includable for open cost reports. Again, though, CMS has stressed that we cannot reopen for that particular issue. Even if it's already reopened for something else, we cannot include a brand new issue like this in it. This is all based on a court case. This is why CMS has allowed this, but it's only for currently open cost reports. Now, if you have one that's getting up to the desk review point, you can work with your auditor at that point. As it says right here, you can amend the cost report to include new Section 1115 waiver days up to the desk review audit begin date. If it has other issues, if it's just for Section 1115 waiver days, you can even amend it or work with your auditor to incorporate that listing during the desk review. Obviously, the sooner the better, the less confusion if adjustments have already gone out. But as soon as that is NPR'd, then there's no longer the ability for you to amend or reopen for that issue. The other thing about this is we do need to see the support for this listing. CMS has stressed in that change request that it must be a separate log. You can't commingle it with the traditional Medicaid days. It has to be separate so we can separately test it. Now, here's the piece that was changed in this final rule that just came out yesterday. This provision that we're talking about here is only allowed up until 10/1/23 discharges. It's no longer allowed. CMS intended for this never to be allowed to begin with, but they realized after public comment over the past couple of years that the rule wasn't properly in place to prevent it from being included. So now for 10/1/23, they now have a properly effectuated rule saying that this is not allowable. These uncompensated care, these low-income pool type plans for Section 1115 waiver days are not allowed. That doesn't mean all Section 1115 waiver days are not allowed. That just means that that special type of Section 1115 waiver day is not allowed. By the way, now that we have the final rule, we will be updating our website. We have a website talking about that issue, and we'll be updating it with more detail for 10/1/23 and after. Let's see here. Looks like we had a question there for the Medicare Part B only days. Those for DISH itself, it's really for the inpatient service. So that the Part B only days should not be allowed. I'd have to look and see. So I'll before I send the email out, I'll try to find that reference that discusses that. Good question there. Thank you. And let's see. Now moving on to the Nursing and Allied Health reopening project. So this is one that also has a little bit of a history to it. The first time we dealt with this, it was in change request 11642, which again, you can find that out on the CMS website. That was back in August of 2020. right around 3 years ago, right at 3 years ago. And CMS required us to complete reopenings to use the new nursing and allied health factors that went all the way back to 2002. Anything that was still reopenable, of course, that's the key thing. They required us to complete those reopenings by March of 2021, which we did. So again, CMS provided the updated nursing and allied health factors, the payments, the days counts, the national day counts, all of that. And then since then, they've been updating the change requests from 2019 and on an annual basis, which, by the way, this Federal Register gave us the next round of updates, which I'll show you the chart here in just a bit. Now, these update factors, yes, they were more accurate, but they tended to reduce most nursing allied health payments for most providers. So that had a reduction impact, this change request did. But at the same time, in this change request, they also updated the GME payment reduction percentage, which for those providers that actually had GME and Medicare Advantage or HMO, it would increase the GME payment. It reduced the reduction, therefore increasing the payments overall. So some providers had a net negative, some had a net positive out of this reopening. Change request 13122, which was issued in March of this year, it updated a different factor related to nursing allied health. Specifically, it was the pool amount that your hospital-specific share would be multiplied against. The pool factor was updated from 2010 to 2019, and any provider that was impacted by this at all would see a benefit because the pool itself increased, therefore the payment increased. When this change request was issued, these were scheduled to be completed by December 28th of this year. However, there was something that came out in the 24 proposed rule that basically revised a piece of this. So we expect that another change, well, I shouldn't say we expect, we pretty much know that another change request has to come out to implement this final rule. And this change is going to impact quite a few of the providers that we are reopening under 13122, but not all of them necessarily. So again, the pool factor increased, which benefited all nursing and allied health providers that had reopenable cost reports through that year. This final rule, basically it said, if you have a hospital that is still teaching, they still have a nursing and allied health program as of, I think it was 12/29 of 22. If you were not made whole by the net changes between these first two change requests for your nursing and allied health payment, then an adjustment would be made to add in that extra amount. So what that means, let's say, again, for this change request 11642, looking solely at your nursing and allied health payment, not including the GME impact of it, but let's say you lost $50,000 of nursing and allied health funding because of this first change request. Let's say that this CR 13122 added $75,000. You're fine. You're made whole. You've received all of the negative plus some. But let's say that same situation where you lost $50,000 from the first change request. Let's say CR 13122 only had a positive $30,000 impact. That extra $20,000 that you didn't recover from this change request, this final rule and the subsequent change request whenever it comes out will basically say we have to add that extra $20,000 in, so that if you had negative 50 from the first change request, your overall net effect from CR 13122 has to be at least positive 50,000. That's the point that's made out of this change request. Again, we haven't received it yet. We expect that when we do receive it, that time frame will likely change. It'll probably reset the time frame. So I may be out in February sometime, something like that. So that is what we have there. But I do want to point out that this is only applicable for hospitals that are still training in nursing and allied health programs and receiving interim payments as of 12/29. There was a pretty lengthy discussion on this, a lot of back and forth public comment about this particular requirement in the final rule, but CMS did stick with it. So now what we have is the final rule itself. And by the way, as I know, we haven't had too many questions lately, but I just wanted to remind you, if you do have questions, I'm checking the chat area from time to time. So with that, we'll move on to the IPPS final rule that just came out yesterday. Now, I do also want to mention here, it came out officially yesterday, but the way CMS and really, I guess, the federal government works, you can actually see the final rule a couple of weeks ahead of time in what's called the public inspection format. It's not your normal 3-column format like a normal Federal Register would be, but it gives you a heads up of what's coming. Yesterday was the official publication of it, so in the formal 3-column format. Here is the link to that if you wanted to open up yourself. I will open it up for a couple of things, but I also want to stress here, for several years now, way back in the day, all the tables and everything were always found in hard copy in the Federal Register or PDF, but over the past several years, they've also been loading the tables that you need in Excel format. They've been loading them to the CMS website. So I actually want to point that out here. I think that'll help to clarify something. So if you go to the CMS website, if you go to the Medicare program or the Medicare link, and again, I'm focusing on the acute care side, but you can find all of the other like outpatient. If you go under this Medicare fee for service, and if you go to the acute inpatient PPS, you'll see on the left-hand side that they have all the rules, the most recent rules, and they have an archive for the other ones. But here, for example, the IPPS final rule homepage, if you click on this, you'll see all the tables you need in these various links. And they have a little bit of detail on what each table gives you. For example, here they have the dish factors, the UCP payments, all of that, all of these different things. So I just wanted to point out that that's where you would find those. What I did here, we're certainly not going to go through all 800 pages of the Federal Register, but I wanted to give you an index as to how this breaks out. And I will say that generally every year the breakout is approximately the same. They're about that long, and they pretty much always cover these same basic categories. We're only going to focus on a couple of them at this point, and in fact, some of them we've already covered in the earlier sections. But I will mention, if you're new to the program, or if you just want to find some more detail on some background of things, this executive summary in the background, it's only 15 pages, but it really gives you a pretty good overview of certain payment mechanisms. And I will say the same thing about when you get down here to this section 5, other decisions and changes to the IPPS for operating system or capital related costs. They give you a pretty good overview of things like Soul Community Hospital, Medicare Dependent, the DISH program. So that's a pretty handy overview. The history obviously stays pretty much the same, but then they keep adding on the new things that have changed. So the ones I'm going to focus on are this subsection 4, the DISH hospitals, and then basically this 5 and a little bit of 6 for the capital. That's pretty much what we'll focus on here. But again, it's an 800-page document. Oh, I will also reference this very last section, details of changes to the rates. Gives you information on those tables. And they also show what regulations were changed in the second to the last section. So here, this first piece I wanted to talk about was the DISH payment, I should say UCP, uncompensated care payment. In the past, in various YouTubes, and I think in some webinars in the past, we've talked about the 3 different factors related to that. I wanted to show what the final factors are versus what they were proposed. So the factor one, which is basically that 75% of the empirically calculated dish payment, the traditional dish, if you will, it's 75% of that pool amount. It was proposed to be 10.2 billion, but in the of the uninsured rate of patients, they think how much that's dropped. The fewer uninsured payments nationally, the less CMS needs to make up with the uncompensated care payment. That's the idea here. So the finalized factor two was 59.29. The proposed was 65.71. So fair amount of a drop. Because of these, you multiply factor one and two together, the proposed uncompensated care pool, the amount that would be paid out to every hospital, or to all hospitals in aggregate, I should say, was 6.7 billion, but now it's 5.9 billion. Now the factor three is what we do the S10 audits for, to get each individual hospital's specific factor three. And that's basically your share of this $5.9 billion. As we said earlier, the factor three is going to be calculated on a 3-year average of 18, 19, and 20 data. Some of the public comments that came out were that, 2020, using 22 or 2020 seems a little odd because of the COVID pandemic we had, which impacted hospitals in many different ways. Some had a significant increases in utilization. Some had significant decreases in certain types of utilization. So there was a comment out there that maybe CMS should somehow exclude 2020. They ended up sticking with it, basically saying that it's a 3-year average. And, as we go through the 3 years later on, it'll work its way out. So at this point, they are using 2020. Now, there was an additional paragraph. I've quoted this from the final rule because another comment came up about, it's come up in prior years as well, but CMS got a little bit more detailed about this in this one. Concerning, I'm just going to read this one because it's a quote from CMS. So, concerning commenters' request that CMS clarify the timeline and procedures that MACs should follow to amend or reopen previously audited worksheet S-10 data, we note that MACs will continue to have discretion to determine if a provider's report may be accepted. And I will mention that's for any amended cost report. But CMS specifically notes here, we also note that MACs will not reject requests related to worksheet S10 revisions solely due to the direct reimbursement not meeting current year amended cost report or reopening thresholds. Now, the reason that's important is that obviously for the current year cost report, there is zero impact by making an S10 change. CMS is saying that you don't have to meet the reimbursement threshold for the current year for changes like this to S10. So CMS is essentially pointing everybody to it's called the Financial Management Manual, CMS Pub 100-06, Chapter 8. So for any hospital requested revisions to worksheet S10, MACs make a determination to accept or reject the amended cost report or the reopening consistent with those instructions. Again, absent the reimbursement threshold. One of the requirements there for any reopening, it has to be new data. So, for example, if it's a newer claim that we haven't seen before, that might be something that can be included, but it's not an appeal type vehicle. So I just wanted to reference that particular quote from the final rule. And let's see, we have a question here. Yeah, for interim payments for any of the nursing allied health programs. So the only way, and CMS goes into this in a little bit of detail in that final rule, but if for example, if you stopped teaching, then of course the interim payments would stop as well. But if you're still training, then yes, there should be interim payments made for your facility. So really that was just to kind of carve out those that had stopped teaching altogether, because really the main point of that legislation was to prevent the reduction in nursing training, if you will. So that was the purpose of the legislation, or that piece of the legislation. But yes, you're correct. Interim payments would have been made if you still teach. It's a good question there. And let's see, this one I already talked about earlier, the payment adjustment for DISH related to the Section 1115 waiver day issue. Effective for 10/1/23 discharges, basically these uncompensated or undercompensated care pools may not be regarded as Medicaid eligible. Therefore, we can no longer include those, that low income patient pool or that undercompensated care pool. That will no longer be allowed effective 10/1/23. But it is allowed prior to that, as long as it's done prior to final settlement, or obviously through an appeal, but not a reopening. Let's see, the next topic I had here was just some rates. So the sole community Medicare dependent hospital, this impacts all IPPS hospitals as well, but it impacts the SCH MDH also. So I just wanted to point these out. I do want to mention that we are working. So we've I think last time we mentioned that we updated, or we were going to update our website with kind of a new claims page. And I'm going to bring that up here, a claims/rates page. We did update that, at least for our initial level of it. It's one of those things that we plan on expanding over the next, few months, or maybe even a year, really going on forward. And one of the things we're going to add to that in the future is the sole community Medicare dependent hospital specific rate calculation. Right now, if providers ask for this, we've just been responding with it, but we're going to put that out there in some format so you can actually see the calculation all the way from the last update, if you will. And these are the rates that are used for the annual update. And it depends on two things. If you've submitted quality data, because if you have not, there's a reduction. And also if you're a meaningful EHR user or meaningful user of EHR technology, because if not, there's a reduction there as well. Assuming you've met both of those criteria, then the update factor for this year is 3.1%. And you can see what happens under the other scenarios. In fact, if you did not submit quality data and you're not a meaningful EHR user, it's actually a negative, quote unquote, update factor, if you will. Now, this is just the update factor. There are also a variety of budget neutrality factors that apply each year. And, over the years, it's gotten a little more complex. It used to be just an update factor and one budget neutrality factor. There have been a lot of things added over the years. I shouldn't say a lot. There have been a few things added over the years. So that's the point I wanted to make. We'll still send out this form if anybody needs a copy of it, but we're going to be creating a version we can post to our website. And I'm going to bring that website up in a few slides here just to show you what we have as a starting point. One other topic that came up in the final rule was how to handle SCH hospitals, sole community hospitals that have merged. Now, the reason this is important is you might have a hospital that's nearby that has prevented you from becoming a sole community hospital because of its proximity. You couldn't meet that criteria. When you merge with that hospital, or if they merge, then that may allow you all of a sudden to become sole community hospital. So CMS said for any sole community hospital application received on or after 10/1 of, this should be 2023, the change, or the SCH effective date, now becomes the date that the merger was approved. Rather than just the application, it's the date of the merger. So it can go back a little further. So just kind of a minor change, but it could mean some money to certain providers. Just wanted to point out the location of the rates, some rates for rural referral centers, the new case mix indexes, and the discharge thresholds. By the way, this page reference, I'm referencing the PDF document. So if you click on that link from earlier and you'll see that 800-page PDF document, this is 401 through 402 of that PDF document. Low volume, we already talked about that, but that can be found on page 402 through 406. Another thing I mentioned, it was finalized without any change. I mentioned this last quarter in the proposed rule, but with these new rural emergency hospitals, a lot of the different policies surrounding this new provider type, they're still being rolled out. So we as MACs don't even have all the information we need yet on this. We expect CMS to issue more in the future. But one thing they did finalize was how this can be treated for teaching purposes, for GME purposes. They basically give these rural emergency hospitals two options. If some other hospital rotates the residents to this rural emergency hospital, that's an allowable non-provider site. So they're allowing that. Of course, the hospital would receive the payment for that. Or if the rural emergency hospital itself wants to incur or does incur the direct GME costs and they train the resident themselves, they can also be paid based on the reasonable costs for those training costs. So that was the option CMS provided in the Federal Register. Again, we expect more policy on this to come out in the future, but at least they've set the rule in place. I mentioned earlier the nursing and allied health rates. They've published the 2022 calendar year rates and the GME reduction factor. It's now 3.27. Oh, also one other thing I did want to stress, I kind of went over it pretty quickly before. I know I covered it last time in more detail. That change request where they revised the pool figures, previously it was capped at 60 million. They revised it up through 2019. That was all the legislation changed. The legislation basically forced CMS to revise the cap up through 2019, but there is not any new legislation yet to revise that cap in future years. So that reopening was only up through 2019. 20, 21, and 22, they're still capped at a 60 million pool, and that is not up to CMS to choose. That's Congress. They'd have to pass legislation for that. So right now we're back to 60 million, and here are all the other factors that we will be updating our nursing and allied health calculation with soon on the website. We talked about that CR 13122. We expect another change request coming out to effectuate the Federal Register final rule. And I already talked about what that factor would be. And then one last little piece here. I mentioned in the proposed rule discussion last quarter. If you have a hospital that was urban and therefore it was urban under 100 beds, it was eligible for capital dish, and now they've reclassed to rural. In the past, you lose the capital dish eligibility because you're no longer urban, you're rural. Now CMS has changed that in the Federal Register. If you've reclassed to rural for a variety of reasons to be eligible for something else, some other payment type, you can still retain your capital dish payment. So page 478 of that document goes through that discussion. So obviously it's an 800-page Federal Register final rule. The vast majority of that would be discussions about the DRG weights and how they were developed, all the different wage index discussions about how they developed those rates. That makes up well over half, probably closer to 2/3 of that document. I just focused on the things that are more relevant to the audit side of things. But again, the link is there for the Federal Register if you want to dig deeper into some of those other topics. Really the last big topic I had before we get into just some minor things is just a reminder or refresher of what we talked about from the cost report documentation requirements, the new templates, so to speak. Now, this issue first came up back in the 2019 final rule. It was worked on with work groups from Max and CMS to try to develop templates that would better fit what we needed at the time of audit, but it was finalized in 2019, and it was effective for cost report periods beginning on or after 10/1/18. So it's been in place for a while. Now, the first requirement, by the way, this is not the template itself. This was where it first came up. This was just simply the requirement to have a listing of some sort for your dish payment amount, your bad debt amount, your S10 charity care amount. By dish, I mean the days, the patient days you're reporting, the bad debts you're reporting, the charity care charges. It also included some verbiage for GME and home offices, but we're going to focus on these three templates mainly. The requirement was that you had to have a listing, and the amount on that listing, the summary, the sum, had to correspond to the amount you reported on the cost report. Obviously, it might be slightly different for rounding purposes, but basically it had to be very, very close. Let's put it that way. Again, it could be any listing at this time, or at this point, way back in 2018, it didn't have to have specified fields. We did post a recommended template to our website. It's one that we had worked on with CMS, with the other Macs, but it was not official per se. It was not mandated that you fill that template out. We would still need that information at the time of audit, so certainly it would behoove you to use that form to meet both requirements, but the template was out there. In August of 2020, CMS issued change request 11644 that basically formalized this requirement that you have to have a template, otherwise the cost report will be rejected. There was still no specific detail on what the template had to look like. In November of 2020, there was a proposed rule proposing a certain template design, and then that went out for another round of proposal in June of 2022. And finally, in December of 22, CMS issued these templates through Transmittal 18 of the hospital cost report form set. And there, again, I know we talked about this last time. We might have some new attendees, so I did want to bring them up. They're in the cost reporting instructions. If you, for example, go to S-2, just look up the instructions to worksheet S-2, as soon as it comes up here. If you go down to the bottom, you'll see Exhibit 3A, which is the template design for the DISH Medicaid eligible day, what your template needs to look like. It needs to have all of these fields. Now, there are also instructions right above it. I've put out 3 separate YouTube videos on our website, and I'll show you them earlier or later. I'll reference them, but they go through each of these templates and each of the columns for the instructions in a lot more detail. But S-2 is where you would find the DISH eligible days. E Part A, of course. Or no, I'm sorry. S-2 Part 1, that's what I showed you for the DISH Medicaid eligible days. S-2 Part 2, which is the hospital reimbursement questionnaire. That is where you're going to find the bad debts, the Medicare bad debts specifically. Now notice there's Exhibit 2, which is the old exhibit, the one that's been required for decades now. And then down below it, if you scroll down further, you'll see Exhibit 2A, which you can see there are more columns there. The instructions are right above it. That's the one effective for cost report periods beginning on or after 10/1/22. And as you can imagine, the S10 charity care charge instructions are found under S10. But it's a little tricky there when you first look at it, because CMS added some additional instructions. they, instead of one section for S-10, they now have kind of three sections. They have the main S-10, just clicking on S10, whoops, and it gives you just definitions, kind of an overview. If you click on part one, this, by the way, and CMS did stress this, or they did finalize this in the rule. This is the one that's currently being audited, S-10 Part 1, the hospital and the hospital complex. In other words, sub-providers and such. That's the one that is being audited at this point in time. So they have all the instructions for that. Part 2 is instructions in this new template under Part 2, even though it basically relates to Part 1 at this point. So it's just kind of an odd thing. That's where you'll find it for now, or you can, of course, find it on our website. They have the charity care charges, and there's also a total bad debt exhibit for that as well. All the instructions, again, are listed here. So, as I mentioned, these are all effective for cost report periods beginning on or after 10/1/22. So we're currently in that stage where we're seeing these. Here's just a reminder of where you find these instructions, what exhibit reference you'll see. We have posted a new version of our templates. In fact, I'm just going to open up that web page and show you what it looks like. Oops. There it is. So if we go to, this is the cost report audit guides and resources. And if you go down here under the cost report section, you'll see the actual cost report documentation requirements and templates. And the way we set it up, there's just an overview section, just kind of talking about that change. But then we have a section for each specific type. Medicare bad debts. Here's the citation from the 2019 final rule, talking about that this is a requirement. And what we did here, we kept the old templates that are effective prior to 10/1/22. Or another for a while. So we kept all of that down there, as well as the YouTube video that provided training on that. But now we also have a link to the 10/1/22 and after cost reports with the new template, the new YouTube video, and then the instructions is a link to the actual instructions, CMS instructions. You'll see the exact same setup for the DISH Medicaid eligible days. And the S10, of course, we have charity care and total bad debts. You know, I wanted to point out home office costs. That obviously there's no template per se for that. There's a cost report form set for the home offices, but this just gives you an overview because the same thing applies. If you're submitting a home office cost, if you're submitting home office costs, you need to have filed a home office cost statement to support them. Now, the tricky piece, of course, is when your year is not the exact same. So if they do have the same fiscal year, then the amounts should obviously correspond to the amount in the cost statement. But if it's a different year, then of course the allocation, that becomes a little more complex. So in that case, it just needs to correspond to some portion of what you've reported. And then by the time we get to the desk review, we'll be doing the calculation to make sure that the two half years, if you will, of the home office cost statements correspond to the actual amount reported on A81 of the cost report. So we have that there. Let's see. Oh, by the way, I do want to stress this piece. So the first stage, there was just a requirement for that you go out and use our exact Excel spreadsheet. You can create your own if you want. We've built in a little bit of automation as far as some formulas to help out summing things up. We added a few flags on the right-hand side to show you when there might be potential errors. But again, you could technically create your own template, but it has to have those same fields. So just keep that in mind there. Now, down the road, CMS may very well mandate a particular template that's locked up and everything, but that will be another step down the road if they do that. Just a screenshot of what we've already talked about there. Here is what I wanted to spend just a little bit of time on. This is what I alluded to or kind of introduced last time as a plan for something we were putting out there. Right now, we're just calling the annual rate information. We might come out to where to find that on the CMS website. As I showed you earlier, some of those Federal Register tables, over time, our goal is to kind of build our web page up to give you a little more guidance on exactly where you go to find this particular rate, what this rate means, all of that. Now, that's going to be a pretty hefty undertaking to go into that much detail, but we wanted to start somewhere. So you can find that by clicking on this link. This was updated on the 25th, just basically a few days ago. But if you go to our website, you should find it under the interim rate. So again, we're still under cost report, audit guides and resources. It's under the interim rate tag, and it's the annual rate information. So again, this is just the early version of this. We plan on expanding it, but this basically says, and this has actually already taken place, there are no annual 10-1 update letters sent out. We are pointing you to where to find those. And actually, again, this has been in place for over a year now. But for example, the IPPS hospitals, this takes you to that page that I showed you a bit ago from the CMS website. Our goal down the road is to expand that a little bit more and tell you exactly which kind of sublink underneath that will take you to which table and what that table gives you. We have the IPPS hospital. This is fiscal year 23. We'll, in the very near future, now that it's available, we'll be posting the 10/1/23 through 9/30/24. Same with the IRF and the SNF. There's a little bit of a blurb about the CMS pricer. You can find a lot of the rates just by going to that pricer itself instead of looking at the tables. So we give you a link to the CMS pricer for those that like to use that. Here's the sole community and Medicare dependent hospital. Now, again, I mentioned down the road, we're going to be putting that calculation out here for you. But for right now, you can either request the template from us, or you can find that same thing on the impact file under that CMS website. For SNFs that have the value-based purchasing factor or the quality reporting factor, these ones are not actually found on the CMS website, but now you can find them here. And again, if it's not listed there, the factor will be 1. For the quality reduction, if you're not listed on that QRP sheet, then that means you are not subject to the reduction. This is only the reduced providers. Some information about the DRG inquiries. Interim rates. Now, obviously, interim rates would not be found on the CMS website, so those letters will still go out. They have to go out because we calculate the rate. That's the only way you would know about it, kind of prospectively, I guess, ahead of time. You can locate them once they're loaded to FIS by going to that DRG inquiry screen, just like the federal rates, but we'll still be notifying you of our calculated rate. Here's just a point about the claims processing instructions, where to find those. It's publication 100-04. The outpatient instructions, there's a separate manual for those. And then there are a variety of FAQs that we started off with at this point in time. Now, as this list grows, we might find a different way of communicating these instead of just having this long, never-ending page of FAQs. But right now, this is a pretty concise listing, or brief enough listing to list them all this way. Yeah, Candace, that's a great question. There's the CMS pricer updated timely. So the pricer itself, CMS has to grab data from our FIS system on that. Now, somewhere here, yeah, here we go. Well, this tells you how far it goes back. It goes back to 10/1/18, but CMS updates that data on the pricer quarterly. So it's not right away. It's not real time by any means. You can locate them immediately in the DRG inquiry screen when you have access to FIS via the direct data entry, because again, we access FIS from our side. That would be real time. You'd be able to see that right away. But if you tried to go out to the pricer to calculate a claim, that'll only be available on a quarterly basis. So if you're familiar with that, with using FIS and using the DRG inquiry screen, that's definitely the best place to go to find those rates. Again, for the new rates, we'll send the letters out as well. Hopefully that helps to clarify that. Yeah, it'd be amazing. It'd be great if there was some way for CMS to update that pricer on a real-time basis, but at this point in time, they haven't, or they don't. So that takes us through the annual rate information. Again, we'll probably bring this up in the next few quarters as we enhance it even further, as we add more to it. But we have hopefully a good starting point for right now. And this is the playlist that'll give you the entire listing of audit articles or audit videos. Now, for the next few quarters, I'll probably still be including a few slides showing each of the videos. At some point, that won't be worth it. We'll have too many slides in that case. But you can see the history. We started using YouTube for our WPS videos back in 2019. Some bad debt topics, quite a few S10 things. All of our recordings, all of our webinars are recorded and posted out here. So you can see the history out there. A pretty big, well, not big, but a nursing allied health legal operator video. The first cost report documentation and templates. Provider-based physicians, audit sampling, cost assignment and allocation. This is what I was referencing earlier about the statistics and the cost centers and such. A volume decrease. This is not low volume. This is a volume decrease. SCH and MDH in general. Swing bed rates. And the various templates that we talked about. And of course, our last webinar, and we'll have the new one posted out there also. One thing we are waiting on, we've been waiting for a few months now. We really hope CMS gets back to us on some questions we have about R8C rates and consolidation in general after the fairly recent legislation that was passed. We don't have any clarification from that at this point. Once we do, as soon as we do, I will definitely be putting up a YouTube video and a website article to cover that, because we have a lot of outstanding questions about that. So we had our webinar today. We're going to plan one for sometime in December. And that, if anybody else has any questions, but the one thing I do want to do in this case, to make it a little easier to take the survey, what I'm going to do here is post this into the chat area. Make sure that's today's. So you can click on that link right from the chat area if you see it. Or, of course, you can click on it from either the email or from the PowerPoint. But I certainly appreciate if you have a minute or so to take the time to complete that survey and let us know what feedback you have. And let's see, we have a question here on time studies. Can we add personnel to complete time studies at any time based on changes in job roles? Yeah, so if you have somebody new that started midway throughout the period, then you could certainly add the time study in there. Now, keep in mind though, if you're still using the same, like for example, January uses the first week, February uses the second week. If you want to use the same structure as you've already been approved for other staff, you don't need to get reapproved. One hospital might have one time study structure that they use for every single person that they track time for. You might have other hospitals that want to break it out in different ways for different departments. So they would get approved for, 2 or 3 time studies, whatever. But to answer your question, yeah, you can, if you have somebody that's changing a job role and now all of a sudden they need a time study where they didn't before, then you can certainly submit an approval request for that. So with that, it looks like we still have a little bit of time if anybody has any final questions before we wrap up. And of course, if not, I'll be sending out the email here over the next few days. I'll probably wait until tomorrow's session is over and see if any new questions come up that I want to include the responses for. But again, I thank you for taking the time for that survey, to complete that survey, and I thank you for even attending the session. Thank you for your time this afternoon. And I hope everybody has a great afternoon. I will talk to you in our next session. Have a good one.